Hey there, cannabis traders and investors. A good bit of news out there this week. We've got Canadian MJ names hitting some fresh lows. We've got USMJ trying to hold the gains from the bounce a couple weeks ago. And we have a lot of fear in the broader market with a little bit of green to start October. The big question is, are our lows in for USMJ or are we headed lower? Let's look at all the little clues we can on the charts to help us gauge probabilities. So a big takeaway this week was a revival of fear in the S&P 500. We had the bounce 2 weeks ago that was very significant, but we gave all of that bounce back and hit fresh lows. Bulls are very pleased to get out of September, which is historically a red month in the market, and starting off October with a solid green candle. Question is, can we follow through? So if you've been following these videos, you know that I've been talking about the need for the S&P 500 monthly consolidation. And I was saying things like, I am not comfortable going long this beat up sector with the S&P 500 at highs because we know that monthly consolidation is inevitable for the broader market, and that's only going to add downward pressure in the sector. So here we have SPY monthly consolidation underway. Now this monthly consolidation is extremely likely to form a higher low. The tricky part is we can form a higher low at 400, we could form a higher low at 427, or we could form a higher low at 360. There's a ton of space for it to form, and obviously those are all very different scenarios as to whether it's a healthy pullback or not. At this point, it's a potential monthly bull flag, but we're not confident that the bottom of consolidation has been set at this point. At a bare minimum, we need a daily trend change back to the bulls. So we had a solid bounce today. Anything under 444.89 is just a lower high. We'll have to bounce significantly enough to create the space to change the daily trend. We already did that. We bounced significantly enough to create the space for a daily higher low, but we started Monday with a big red flag with red bear volume and a gap down, and again, the retracement. And watch the video on our YouTube channel about fib retracements to help us gauge probabilities, because as soon as we drop down and get back more than 50% of the bounce, the red flags start to fire off. So we have to keep an eye on the broader market when gauging the sector because it is adding downward pressure overall. If there's fear in the broader market, then we're not going to have confidence in the MJ sector, in my opinion. So we need that fear to be alleviated. And again, the best time to buy MJ in the last 2 years was at the COVID lows. Once we had flushed out all that fear, it got as fearful as possible, and then that low was the time to be buying. So best case scenario for the sector, for bulls that are already in positions, are that SPY is a monthly bull flag, that a daily trend change back to the bulls is coming within the next week or two, and we'll be talking about all-time highs later in October. That's a possible scenario, and anything less than that, if we keep dropping the lower lows, and if we keep seeing these big red days, then again, we have to be cautious because it's going to add downward pressure on the sector as a whole. Canadian MJ is weaker than USMJ. We had downgrades out of Bank of America on CGC today, and CGC hit a fresh low. So whenever I'm looking to determine what is the most likely scenario, I'm viewing it as probabilities in my mind. And I essentially have just a list, bull and bear. And for every detail, I put a point in the bull column or a point in the bear column, and that shifts probabilities. So the fact that Canadian MJ is dropping to lower lows is a point in the bear column. And you could say, well, we've got, this news out of the USMJ sector as far as the House committee passing the potential decriminalization, and now it's going to go towards a House vote. And yes, there are definitely differences between Canadian and USMJ, but USMJ bulls would be more comfortable if Canadian MJ names were in daily uptrends right now. But every lower low that we hit is not ideal. It's the same team. We're on the same team with Canadian and USMJ, and I know a lot of you don't feel that way, but if one's doing well, it benefits the other. And if one's collapsing, it's not going to help the other. It's the same thing in the cryptocurrency space. You have people arguing over coins. If you are an Ethereum bull, you want Bitcoin to be going up and vice versa. So CGC hit a new low under 1335. We're now looking at 13 psychological. We know we're in an area with a lack of support. We broke 1383. That means we're looking down now at 1295 and 1288 as a couple support levels back from April of 2020. So about a year and a half ago. And again, these previous support levels don't mean a whole lot to me. I need to see daily trend changes and follow through. And CGC is just struggling. Look at the daily EMA 12 is just a very clear downtrend. And when's the last time we've seen 2 solid green days in a row? It's been a while. End of August. So we just went an entire month with a green day here and there. But again, no momentum, no follow through. So the only thing that the bulls can hope for at this point is just that the bear breaks start to lack follow through, which is what the psychological setup is for a falling wedge. A falling wedge is when bear breaks lack follow through. It shows us bear exhaustion. You reach a point where the supply of shares has been outweighing demand for shares for a prolonged period of time. You reach a point where there's nobody left to short, there's no longs left to sell their positions, and that's when we flip very quickly. And news catalysts can lead to those scales tilting, but at this point in time, that's really all that these bulls have going for them because we are unable to shift any momentum. So the bears are in complete control of CGC. I'm looking at resistance of 1505, and you can see we topped out on a bounce earlier this week at 1498. So there's a little double top around 15, and I will just make a simple statement. If 1505 is resistance, then the bulls aren't proving anything to me. If we get over that level, we'll say, all right, that's a notable shift. But that is over 10% from where we stand right now. The weekly RSI is oversold. So again, it's worth keeping an eye out for that other direction for the bulls to try and take over, but there is no sign of it at this point. We've got a pattern of a lower high every month for 7 months in a row. We're on our eighth month now. And have to see a notable change. TLRY, bear break of 1102, lack of follow through. So if we see a couple green days in a row to start next week, that will catch our attention because it's a bear break with no follow through showing there's not a lot of stop losses triggering under 1102. There's not a lot of bears jumping in short on a break of $11. So we've got clear resistances, 1240. We topped out at 1227. We failed a daily trend change. We needed that higher low and higher high, failed to do so. So again, if the bulls cannot break 1240, they're not proving anything to us, bigger picture. And weekly time frame is not nearly oversold at this point. And the next support level after 1102, I'm looking down at 840. So we're entering an area without a whole lot of support established. There's a gap down at 954. 1068 is a little level back here. So another name where the only thing you can look at on this chart as a bull and say, well, we didn't fall apart when we broke the lows. And that's about it. ACB is a lead bull, very clearly for Canadian MJ. And we look back at the last earnings report, what happened? We had a significant multiple week bull run from that point. And bulls are looking at this and hoping, is this the start of something similar? And at this point in time, we are almost 20% above our recent low. And we're in a pattern of a higher low every day the last 4 days. So the bulls obviously want to keep that pattern up as long as possible. And we're looking at 774 as the most significant resistance level from here. We've got a lot of space where the next time we consolidate, we're going to look for a daily higher low to form. And again, it's just comparative to the sector as a whole, ACB bulls are very pleased with this week. So solid volume on the week, highest weekly volume as far as share count. Keep in mind that a million shares at $6 is very different than a million shares at $10, but it's the highest share count of volume that we've seen in many months. And volume climaxes often signal tops and bottoms, and bulls are certainly hoping that that is the case with earnings this time around. If we reject from 774 on the initial attempt, bulls will hope for a daily higher low and then follow through. So I can look at this and say, well, ACB bulls are positioned well for a number of things. They're positioned well if the Canadian MJ sector starts to bounce as a whole, because this is clearly just ACB related right now with its earnings. And they're positioned well if the broader market were to shift from fear back into bullish confidence with the daily trend change back to the bulls, which will take a while to develop. But again, positioned well. Haven't looked at VFF in a while. Not fresh lows. Again, no follow through, but that's about it. So that's Canadian MJ. They're weak. CGC weekly RSI being oversold. We know we're going to see a weekly bounce from oversold conditions. We just don't want to be too early for that. And I was too early. I was trying to bounce back here and stopped out. And that's why stops are so great, because if I did not stop out, I would be in a world of hurt right now just a month later. USMJ, IIPR, nice hold of support today off of 225.45. And we have a weekly downtrend close to confirming. So we have the all-time high. We set a weekly higher low at 225.45. We failed the all-time high. And if we break that 225 level, it's confirming a lower high and lower low, which confirms a downtrend, which means zoom out and scout monthly consolidation. So the broader market is seeing monthly consolidation. We know we've had a lot of correlation to the broader market in IIPR, and there's a lot of space for a monthly high or low, anything above 162.81. So no major red flags at this point. And considering what the broader market has done, the fact that the bulls are holding this weekly EMA 12 support is still a good sign, but just have to be cautious, because if 225 breaks, that tells us more consolidation is coming. And at that point, we'll be scouting daily oversold conditions for the first time since all-time highs, which we consider back burner trades. I got a video on that, and I love back burner oversold bounces. On the current bounce attempt, I would call anything under 248.14 just a lower high, but essentially a tightening range, and the bulls hoping for some follow through, for some confidence that that 225 support level can hold. So if I'm a bull making entries, I'm playing off of 225 because I don't want to be in a position if that level breaks and monthly consolidation gets going. MSOS. So the USMJ sector right now is really tricky. And honestly, I can't say if our bottom is in or not. I don't have a whole lot of confidence, which means a number of things. Number one, I'm not trading aggressively. I'm trading with less position sizes because I don't have confidence. When you're confident, you put the pedal to the metal and you go aggressive and you use large position sizes. When you are not confident, you don't, and you ease up and you wait for that confidence in a setup. So Canadian MJ 2018, 2017, confident, big positions, pedal to the metal. But this right now, we can drop to lower lows on USMJ. And yesterday we had the vote going through for the House committee to potentially move forward decriminalization of marijuana. We have to have the House vote on it, but we know, again, it's the Senate that matters. It's the Senate where the big hurdles are for the USMJ sector at this point. We're getting word that potentially Schumer is not going to be down with the NDAA Act having the amendment of SAFE on it. So not a whole lot of hope there. The good news is the more that is vocalized by Booker and Schumer, the more it's priced in. So if it does get the boot, I would expect a bit of a bearish reaction, but it won't really surprise the market. If it doesn't get the boot and it passes, it surprises the market, and we see a solid bullish reaction to that. Shout out to the people that follow along and watch those god-awful government voting sessions, because there is opportunity. And we had a couple members sitting for 2 to 3 hours watching, and as soon as the results are in, the price then ran 2.5% at the end of yesterday. And that was with the broader market dumping. So again, if I'm talking about bull column and bear column on this move right here, I can look at this on the daily chart. And if you just give me this chart on its own and you don't tell me anything else, I say, that's not really a strong bounce. There's not a lot of confidence in the bulls there. But I could look at this and say, well, the broader market dumped all week and we're not near our lows right now. So that's a win. We're not close to hitting fresh lows like Canadian MJ is, and we're not dumping significantly with the broader market fear. Essentially, what the USMJ sector wants to do is hold the lows that we set 2 weeks ago. And even if it's just trading sideways, just wait for the fear to be alleviated in the broader market. Because if the broader market can set a monthly high or low and head back towards the all-time high, then we'll be positioned for a bit of a momentum shift on the longer term timeframes. But if we drop down to fresh lows, again, it's just going to be fear back in the sector. So a couple things to notice. When you're trying to change a longer term trend, weekly, daily downtrend, and a higher high lacks follow through, it's a red flag. So we had a higher low and a higher high. No red flags there. That's a solid amount of follow through. Okay, we'll take it. Another little higher low. And then right here is where I started getting red flags, because we had the high of 32.64 and we broke to a higher high, but only by 14 cents, 13 cents. And when you break resistance and then go straight into consolidation, it's not a good sign, because it shows a lack of follow through. What you want to see when you're changing longer term trends is a break of resistance, increasing volume and follow through, because that shows you shorts forced to cover and bulls piling in on resistances breaking. And bigger picture, if you look at this chart, we're still clearly in a weekly downtrend. Our weekly resistance of 33.46 is key. The volume is a good sign for the bulls because, again, volume climaxes oftentimes mark tops and bottoms. And the bulls are certainly hoping that this volume climax is marking a bottom. The headlines are nice. Again, whether or not, getting this subcommittee vote, it doesn't really move the needle as far as anything in the short term. We just have to look weeks later and then another vote and then it's got to go to the Senate. But the headlines are nice. We see responses to the headlines, whether it's on Twitter or articles or CNBC. That's what gets attention on the sector. And that's why voting season is so beneficial for the sector. Yes, positive developments, but it's also the constant media coverage, which is very beneficial. So again, points in bear and bull column, I can look at yesterday and say, well, we were green and the broader market was extremely weak. That's a great sign for the bulls. But now today, the broader market had a good bounce day and we didn't get any follow through from the end of the day momentum yesterday from the subcommittee passing the vote. So that's a point in the column of the bears, to not be able to follow through when the market conditions are ideal and you got some decent news at your back. Not ideal. So if we drop down and break 30.28, it's a big red flag that we are looking right back down at that low. If we break that 29.10 low, we know we're in an area where not a whole lot of support was established on the way up. 28.55, then there's not much until 26.32. So bulls need to hold the line and follow through. 33.46 is the key weekly resistance because every single bounce that we've seen since the all-time high has been a weekly lower high. There's been 1, 2, 3, 4, 5, 6, and if we do not break 33.46, this will be 7. So that's the level that matters to me. I do have some exposure. I do have MSOS exposure over the last couple weeks with this shift that's been underway with the help of the headlines, but I will cut it if we drop to lower lows. And then I'll try all over again. And I would rather just have a bunch of little small losses, and then once the momentum really does shift, I've got a position that will easily make back those losses. That's the game plan that I have. I know a lot of you are riding it out, and that's perfectly fine if that is your game plan. TRUL, so news today, the deal closed with Harvest Health, and they got a loan, 300, it was either 300 or 350 million, 8%. A lot of people looking at that and saying, hey, that's a good deal, especially for the MJ sector, single-digit percentage, non-dilutive, and a good sign overall, but a big upper wick of profit taking. We started with a really strong day, but we rejected from resistance. And I'm looking up, we can use the US ticker here. So resistance, $30 is where we topped out, nice round psychological number, 29.36, and now 29. So rejecting from resistance. The weekly time frame did break the last little lower high, like MSOS was unable to do, but it's really choppy. Are we in a daily uptrend? I would say we had our higher low, higher high, higher low, lower high, lower low. I would say that we lost the daily uptrend. So the most important support short term is 25.45, and if that breaks, we're looking right back down at the low. So pretty much the low of Thursday is a key level heading into next week, because if that breaks, everybody's going to be looking at that bottom. And if that holds, then we can try and salvage, try and slowly climb back up towards that recent top, which is our key resistance level. CURA, daily inside bar today. So again, it's not a crystal clear trend at this point. I would say we changed the daily trend bullish. We set a higher low. We failed to break the high. We broke support. So you could definitely say that we went from a daily uptrend and then quickly lost it. Bigger picture on the weekly chart. Again, we broke to the highest price in a couple months, so that's a decent sign. We had Cresco News. They cut down their expected revenue numbers a bit, so that was a little bit of a negative. But overall, it was pretty much just the sector this week responding to consolidating and then responding to the House subcommittee vote. Weekly inside bar on Curaleaf. So USMJ, definitely not confident. Watch these inside bars. If the inside bars break bear, we're testing the lows. And if the inside bar break bull, it'll be a big sigh of relief. And just need that broader market to help. And today was the day that, we could have seen nice green follow through, second green day in a row. And it's the same thing, how often do we see multiple solid green days in a row? We've had a couple times here because of the recent developments in the government, but short-lived. So I am still cautious. I am in a position, but it would not shock me to see lower lows, especially if the broader market continues its daily downtrend. Psychedelic sector, again, another point in favor of the bears because the psychedelic sector is going bearish with the Canadian MJ sector. And USMJ is more ambiguous, but a lot more clearly bearish in these other two sectors here. So MNMD, when you change the daily trend, the last thing you want to do is go straight into consolidation. We did it back here. Higher low, higher high, drop down. That shows me it was a weekly bear flag. So here we have a higher low and a higher high, and now a lot of red in a row. Closing lower than the open 6 days in a row. So support is 230 and 227, but again, just no momentum and no follow through. And we're just sideways the last couple of weeks, but again, just clear weekly lower highs every bounce attempt. CMPS hit a fresh lower low. There is a downtrending support line here to be keeping an eye on. So again, same as CGC. We hit a lower low with no follow through and we started a daily bounce. So that's a good sign, but really it's just bulls playing a little bit of defense, but not doing much to prove offense. And the weekly time frame, lower high and then drop to that lower low. It is a falling wedge setup. When you break to lower lows and you lack follow through, you scout falling wedges, but bulls have to go on offense, and fading all the way back is a red flag. Back to retracements. When you see this solid bounce, you want to retrace 50% or less of that move to set up a trend change. And as soon as you retrace 50% or more, you then look at a tightening equilibrium as best case. And in this instance, we just dropped down to that fresh lower low. ATAI, again, look at the retracement size. That's a monster bounce. That is a ton of space for a trend change to try and set up. Failed to do it. Retracement now, 70% of that bounce. And there's a play off the all-time low, but at this point, the bulls are just hoping to hold 13.13, and then we would look for a lower high and tightening range compared to 17.90, the high of the initial bounce. I do like CYBN for its nice clear daily equilibrium and tightening range. We've got our high, the low of the drop, lower high, higher low, lower high, and here are bulls attempting to defend 198. So the trade setup here is an aggressive bull is making an entry in the low $2 range and putting a stop under 198. A patient bull is going to wait for a break at 243 and try and play off that momentum. But you can condense it to the 2-day time frame where every candle is 2 days here. And you can see it's just an equilibrium that's been forming for 2 months at this point. So that tells me that volume and volatility will be coming to CYBN in the near term. And the bulls are obviously hoping it's a bull break for a weekly higher low. You can see it's a weekly equilibrium tightening up. So that it's possible that this daily breaks bull and then it just forms a weekly lower high and continued tightening range there. So inside bar and a potential play off of 198 support. So I like the setup, technically speaking, for CYBN better than anybody else in the sector, just for its clarity. So the main takeaway from this video, unfortunately, I'm not giving you predictions. I'm not saying we're about to go bullish and this is our price target. And some people do that, and that is just not my style of trading. I take it one day at a time. I shift probabilities every single day because every single day I'm getting new information. Some days it's not much information, but we have to constantly be viewing the details that are being given to us. What's the broader market doing? That's an important factor on a daily basis. And right now it is fear. And the bulls must confirm a daily trend change. So I am cautious. I am in a position. I will stop out. I'm not giving up on the sector. CGC and Canadian MJ will see weekly oversold bounces. It's just a question of when. We can see things get extreme, absolutely. And as of right now, overall, I would say not an ideal week for the bulls in the MJ sector. And if they can come out swinging next week and head back up to our bounce highs, that will be a big sigh of relief. But if we head back to those lows, we can definitely see further downside in this sector. I appreciate you watching. Wish I had better news for you bulls. I know 95. One thing that I wish that this sector did more, and I'm talking on Twitter and social media, hedging. Why are we not talking about hedging? 98% of the people interested in this sector are long. Why are we not talking about how to properly manage risk in longer term investments? I don't understand that. It would be, I mean, you don't want to be hedging down here, but 4 months ago would have been a great time to hedge. So I'm going to be talking about hedging a lot next time we have a bull run, because that is one thing that is missing in this sector. When everybody gets euphoric and everybody's looking in one direction, sure, you can be a long-term bull and you can want to hold your positions for 10 years. That's great. But you can use some little capital on the side, whether it's through options or whatever, to hedge your long-term exposure, because we know consolidation is inevitable. We know there's summer lulls in this sector extremely consistently. So why don't we take advantage of hedging our long-term exposure so it's not as painful? All right, do good things, have a great weekend, and we'll see what next week brings.